That was an excellent presentation on gold, and now we'll just tell you where we think we fit in. And so when you look at the global gold industry, I'll start off with the macro trends and then talk about why we think that Africa, in particular West Africa, is the place to be, and hopefully give you a reason to go out and buy our stock when I finish today. So in terms of looking at the global gold industry, it's been a challenge, as you can see from Eric's presentation beforehand. Because of the gold cycle, we've seen discoveries fall, we've seen grades decline, and as a result, we've now moved into a period where we're ex-growth as an industry. As one senior gold company likes to say, flat is the new growth. So the next slide just points out that we can't really turn this around quickly. It takes more than a decade from discovery until first pour for most mines. And the next slide just highlights that. So we hit peak discovery in 1995, and it was a full 20 years thereafter before we hit peak production. So a full 20 years. So the next slide actually focuses really on exploration spending and discoveries. And it doesn't really tell a good tale. So despite the fact that we have spent more money on exploration than ever before, we're generating fewer discoveries. And I think there's a couple reasons for that. First is, unlike the oil and gas sector, we haven't really made any technological changes in the way we explore. And second, a lot of those exploration dollars were spent in more mature areas where the hit rate, unfortunately, is lower. So as a result of that, we're seeing grades decline. So over the past 20 years, the average grade processed for an open pit deposit has declined by 50%. Yet as you saw in the earlier slide, production continued to increase through 2015. Well, the reason for that is that, we just moved and processed more material. And that costs money. So when you look at the industry and you look at the increase in capital costs over the last 10 years in operating costs, it's because of lower grades. We're just moving and processing much more material than we used to be able to meet that increased production. And so when you look at the senior gold producers, they look for those elephant deposits, those really big ones. But as you can see on the slide, there are very few of those. The majority of gold deposits are sub 4 million ounces. And that's really where we're focused. We believe that we're in the sweet spot of the market, the junior and mid-cap producers, where you're targeting those types of deposits that are sub 4 million ounces. Now, there are benefits to those. One is they cost less to develop. And two, generally speaking, there's lower development and operating risk attached to those. And we think that as we move forward, we're more likely to make those types of discoveries. But we've talked about the global mining space, but all's not lost. There are some areas of the world that are actually just beginning to shine. And we believe that Africa, in particular West Africa, is one of those. So when you look at the global mine production slide, Africa sat number 2 last year in the world. West Africa actually comprised half of that production profile. So if you think back, in 1990 there was virtually no gold production in West Africa. Today, it's half of African production, and it's almost equivalent to North America. We could have never imagined that 10 or 20 years ago. Clearly, Africa, in particular West Africa, is a growth area. Looking at this slide, 3 of the top 5 gold-producing regions are in Africa. When you look at West Africa, gold production has grown at 8.5% compounded annually since 1990. That far exceeds what the growth in either South Africa, North and South America, Oceania, or even Asia. So we think that Africa, in particular, West Africa, is really the place to be. And while for the most part, West Africa has been dominated by junior and mid-cap producers, we think ultimately the larger cap producers are going to have to come because it is clearly a growth area for gold discoveries. So needless to say, we think that we're in the right place at the right time. We have just expanded beyond Senegal into French West Africa, moving into Côte d'Ivoire with the exploration JV that we signed back in June. And then last month, we completed the acquisition of Griffin Minerals that took us into Burkina. We're clearly a West African growth company now. We think that we tick all the boxes when investors look for gold investment. We're located in mining-friendly jurisdictions on prospective gold belts, and as you could see from the slide earlier, we're making more discoveries here in West Africa than most other regions of the world. We've got a large, long-life asset with a reserve base of 2.6 million ounces. We've got organic growth. We have a project that generates free cash flow combined with a strong balance sheet really gives us the financial ability to move forward on these growth initiatives. And we're supported by a cornerstone investor who is the largest employer, and I'll talk a little bit more about him in a minute, that understands this region better than most. So really, as we look at the assets that we've got in our portfolio, start off with Sabodala. We've produced over 1 million ounces from Sabodala since the IPO in 2010. It's one of the most mining-friendly jurisdictions in West Africa. We straddle, this is a greenstone belt that straddles the border between Senegal and Mali. 2/3 of the belt are located in Senegal. This greenstone belt is similar to the greenstone belts you see in Northern Ontario and Quebec, as well as West Australia, that have been so prolific over the past 100 years. So more than 50 million ounces have been discovered on this greenstone belt, the majority in Mali over the last 25 years. Senegal was late to the game in terms of modernizing its mining code, but more than 12 million ounces have been discovered, the majority by ourselves, as well as Randgold and IAMGOLD, who both have advanced projects in the country. So as you look at our project closer up, we start off with 1.5 million ounces at the IPO. We currently have 2.6 million ounces in reserves. So through exploration and acquisition, we've increased our reserve base net of production by 80%. We have 300 square kilometers of permitted mine license. We've moved from a single pit operation to a multiple pit operation, feeding a central mill. Our exploration program is really twofold. We've got over 4 million ounces in measured and indicated resources, so we're working to convert those open pit and underground resources to reserves. As well, we're looking for the next major discovery. We announced last month that we had made 3 discoveries, 2 on the mine license and 1 on the regional land package. They're small at this point. This is early days, but we've got 5 drill rigs drilling those, as well as a number of other targets, both on the mine license and regionally in the coming quarters. So as we look at the year so far to date, we've had a very strong year. We've got record production through the first 3 quarters. We're on track to meet our guidance for the year. Our cost profiles come down materially, so we're generating our profits and cash flows are up. We've put $15 million on the balance sheet so far this year, and we're having a very solid year. So as we look at our life of mine plan that we announced earlier this year, we expect to be able to produce at least 200,000 ounces through 2024, and with the exploration program, we believe that we can extend that out further. And as you look at this next slide, you see that not only are we producing gold, we're generating cash flow. So at $1,200 gold, over $500 million we'll generate just based on our current 2P reserves of 2.6 million ounces. The cash margin on those ounces is $240 an ounce at $1,200 gold. That is after the Franco stream. That includes all corporate costs. The only costs that aren't included are income taxes, minority dividends, and interest, which is de minimis because we don't have much debt. So we think we're in a very strong position to be able to grow our business on the back of our Sabodala asset. So turning our attention to Burkina Faso, where we've just completed the acquisition of Griffin last month. And we've acquired 3 assets. Banfora, which is an advanced development project, as well as 2 earlier stage exploration projects, which are located on what we think are prolific belts. So we'll have more to say about that in a minute. So first looking at Banfora. So our timeline for Banfora is moving that into production as early as the first half of 2019. We're currently updating the feasibility study, and there's 2 elements to that. The first is updating the reserves and resources, which is well underway. The drill program that we conduct in the 3rd quarter is proving out our theory in terms of the grades and the ability to expand the original 4 deposits, which were included in Griffin's 2013 feasibility study. But beyond that, there are 11 deposits where various work has been done which are not included in reserves. And that program, exploration program, is starting this week. So as we move forward, we expect reserves to increase, and we expect to be able to bring the cost to build the project and operate the project down. It is early days, but based on the met work that we've been doing, we actually think the met work is very similar to our Sabodala mine, so we may actually build the Sabodala plant over in Burkina Faso. And that, for us, creates a number of synergies. First of all, it lowers our development risk because we know it works. Second, it lowers our capital and operating costs as we move forward. So we think that Griffin and this Banfora project is really a company maker for us. Turning our attention beyond Banfora, and what a lot of people don't talk about is the other 2 exploration properties that we acquired. Golden Hill is something that we're really excited about. It's got the right address. It is located on the Hundu Belt. It's along strike of the recently completed Rocks Gold project in Burkina Faso, a high-grade 15-gram underground deposit. It's along trend with the Siao deposit, part of the Samifo deposits, as well as close to the Mana project, which is part of Samifo, and within 15 kilometers of Hundu, which Endeavour is just starting construction now. So assuming that we move forward and start construction of Banfora, there will be 3 gold projects in development in Burkina as we speak. So we're excited by Golden Hill. There's 10 targets to be drilled, and that program is just starting this week. Elsewhere, Gorma, earlier stage, it's in the east of the country. Not a lot of work had been done prior to 2010. But what Griffin had done is they had secured about 60 kilometers of this green shear system that you see on the slide. Work's going to start on that one in 2017, and it's going to be a busy year for us, so we should have a lot of exploration results, and knock on wood, they're going to be good. So turning our attention to Côte d'Ivoire. Côte d'Ivoire is probably the #1 jurisdiction in Africa from an exploration standpoint. It's very early days, very untapped exploration potential. And we've entered with a JV with an individual, David Mimran, and the Mimran family, who are actually based here in Geneva. The Mimran family have been active in West Africa for more than half a century. They're the largest employer in both Senegal and Côte d'Ivoire, and they are looking at opportunities in Burkina Faso. And so with David and his family, we've got a local partner. And their relationships and in-depth knowledge are irreplaceable. David's also our largest shareholder with 18% of the company, and he sits on our board. This is early stages. We've got 4 exploration properties that comprise 1,400 square kilometers. We are going to continue to pick up property and move these forward. But we're very excited to be in Côte d'Ivoire, and we hope to have some great results as we move forward. So if you look at Teranga, we proved when gold prices were $1,100 and looking like they were going down that we could survive. And we've now proven, and you can see, that we can grow and put cash on the balance sheet at these prices. I think that makes us a very compelling investment opportunity. So as you look at our company over the last 5 years, we've demonstrated that we can make acquisitions and fill a portfolio. We can develop projects and build mines. And as we move forward, we'll be taking those skills forward. And we think that we are uniquely positioned in West Africa to take our production base from 200,000, which it is today. Banfora could add 100 to 150,000 ounces per year. And with this pipeline of projects, we have opportunities to, number one, extend our mine licenses, our mine lives at these two projects, as well as possibly create new discoveries that will lead to new mines being built. So we have a very strong portfolio as we move forward, and we believe that we're going to be able to grow both reserves and production. So despite the fact that we are a compelling investment opportunity, we are trading at a discount to our peer group. I think that the fact that we missed our production guidance last year, as well as people not understanding the Griffin transaction, are responsible for this. But as we deliver on our quarterly results, and as we mentioned earlier, we're well on track to meet our guidance for the year. We've got a number of exploration programs underway, and we expect to have encouraging results. We think that'll be a catalyst. Combined with, by the end of the second quarter next year, we expect to have an updated feasibility study on Banfora, which we believe will be positive, and then ultimately move that into production in Q3 with major construction Q4. Will all be catalysts, as well as Eric mentioned. We think gold prices ultimately are going to go up. And we think with the rising production profile that we've got, with the clean balance sheet, we're well positioned to be able to deliver strong returns for our shareholders. So we're very excited to be in West Africa, and we think we've got a great